Got it. Can you guys see my screen? Let's go over the topics today. I'm doing good. I'm doing good. And I was gonna go over some trade reviews today, and I'll just show you some trades that I've been shared with like by a few friends, and I'm gonna go over those today. And yeah, there's some things to talk about because some trades have went wrong for a few friends of mine, and I'm just gonna do a trade review today. But before that, let's just go over BTC and what the markets are up to right now. Going over the higher time frame chart, I've shared this chart so many times on my Twitter all the time, and we have pretty much like formed this sort of reversal on the chart right around here. If you plot a volume profile on the lower time frame that's right here, you're gonna see that this has essentially formed what I had shared. You would want to look for a reversal, so you have a like what this really represents is a type of exhaustion in trend. So if you have a downtrend that's like just a lot of sellers are in control, and at some point what it does is like it starts to exhaust, sellers somewhat run out or of interest or run out of money, and what it does is like it stalls the selling momentum, or there's maybe some buyers that are willing to lift up the price, and what it does is like it stalls the price, and the price eventually shifts into the other counterparty, and that is so you see a lot of like shorts sells coming in right here, but there's nobody to like continue that sort of momentum. So if somebody sold like 100 BTC here, there is nobody that's willing to sell another 100 to keep the momentum of that specific trend there, and that's how like the trend starts to exhaust, and buyers see that sort of momentum and sort of form structure like this, which builds up a lot of liquidity for shorts in laying into the lows. So for example, if there's somebody that's like short, because obviously there are still people trying to push the price down, what they do is like they ape into shorts right here, and whenever price moves back up, that means that they have been stuck into that price level, and the more that they get stuck into that price level, the more they are utilized for a counter trend. And that's why these holding of lows is explained better. This is just counterparty, fading counterparty most of the time. And that is what forms a reversal structure. And if you see here, that is essentially what we went for after quite a lot of chop, which is okay and understandable in reversals, exhaustions, and it continued that sort of trend afterwards, knowing that there's quite a lot of delta that's stuck right here. Because if you attended my last streams, I told you the moment we accept back into this sort of value here, and the moment we break down off this value here, in my first Twitch stream, I'm pretty sure I shared it to everybody. So if you, the moment it's like price breaks down here, it's likely that it rotates all the way down to seek like more balance from prior balance, and that's exactly what we did. We did like a full rotation off of that imbalanced structure right here, and we just couldn't accept back into the prior value because there was some exhaustion. And there's if you see these lows, these are like the lows that led to an expansive move all the way up to a new high, all-time high. So this was like I shared this in the prior streams as well. If price is gonna bounce from any level in all of this chart, this has to be the level right here, and that's where we bounce from. Because if we accept it back into the prior value, we were gonna go all the way down to this POI that's lower right here. Obviously, that's what's gonna happen after we break down off of prior balance. And now price is still imbalanced, so it's likely to seek structural balance either at this place or it's gonna come back to this place. This is the middle ground, so you can expect any sort of like trend that starts to happen here. You can expect a pretty good trade off of that trend right here. If it starts to slow grind here, you can get a pretty nice long all the way up to the value area low of the higher range. Or if it starts to break down here, I'm interested in a short. I'll probably trade a short setup right here and short it all the way down to the value area high of the lower range. So the moment it starts to like get some sort of like trend or continuation setup right here, it's gonna be a pretty good trade in the making. And moving to the lower time frame, I have just been holding this one long all the way because I know it's just not gonna break down. Because if it does break down off of this level, then I would have so many short setups right around these levels, and I could just short all the way down to the value area low here. So I had a huge POI around this level, so I just like held on to the long, and we did like somewhat nuke back into the POI right here, but we held off of like range POC, which is one of the rules of AMT auction market theory itself, that if price has become imbalanced, and you know that there's like balance in like prior price or price below, what price does is like let's just say it runs all the way up and price is starting to come back here, and if it rejects or bounces off the POC, that means it's seeking higher value. If it bounces off, if it like rejects off, that means it's seeking like more balance that's lower than current price. And this is mostly a very reactive price level, because you know the POC itself is a level where the most amount of volume has occurred. And I shared in the last streams as well that there's like two reasonings for the POC to work. It's like there's buyers sitting here as well defending their prior entries. Maybe some buyer bought some price here and he's like defending his entry, because if it goes below, he's gonna be in a loss, right? And there's probably some people that went short here and they're like, oh, we fucked up, we have to like get out of our trades. And what they do is like they exit their trades break even. So that just provides a mechanical bounce like you see here. And this is what a mechanical bounce really looks like, and this is a pretty perfect example. This here, it was just like sort of a continuation, some illiquid continuation. I'm not sure what session this was. I think this is, yeah, this is exactly New York open session right here, and that just like led to a pretty decent move up all the way from that POC level. And for now, I'm just like I told you, I am either looking for a breakdown of momentum right here, which could be that we have taken the highs here. It could be a sort of deviation the moment we get some sort of confirmation from here. And I will probably look for TPs around here. I haven't really explained what a POI is in most of my streams, and I will probably explain that later on. This stream was supposed to be like an order flow session type of stream, but I just had some interesting questions come up to me, so I thought I had to like explain those before I go on to like order flow, because order flow is gonna be a very complex subject for most new people, but for people who like understand it, it's like on their fingers. It's very easy the more you understand it. Going back to the questions, do we have any questions in the chat? Let me see. Pendu asks, but in theory, we shouldn't have reversal from consolidation. I would expect a SSL grab before going higher, and that would look like that. I think you're talking more about like forex terms. Most of the time on BTC, you don't have to have like that. Obviously, like this is a roundish bottom. It holds a lot of liquidity sitting below it. But that's the point. You have to build up liquidity in crypto markets, knowing that it's not like a mature market. You have to build up that sort of like liquidity to be able to run trendy moves here. If it was forex, then what would happen was like we form a roundish bottom, we come into a POI, and then we like sweep those lows first, and then we continue to trend up. But for BTC, or for markets that aren't mature like BTC, Ethereum, and crypto, what we do is like we just form roundish bottoms and they just pump right off. Surely there's quite a lot of liquidity that's just sitting below these, but it could be taken maybe like after we take the ATH, or maybe after we reject off of here. That's very subjective. That requires a lot of context, but most of the time round bottoms like this with a lot of liquidity built below or above them just tend to work more, because a lot of it is like fading off like counterparty, and a lot of liquidity is built up for specific purposes of running up the trend and getting more people to FOMO in. Because that sort of like SFP pattern is like is what happens in a mature market most of the time, like forex. And that sort of like entry, let's a lot of people enter into trades. This sort of entry does not like this sort of round bottom, because most people know that this roundish bottom has a lot of liquidity below, and they expect a sweep of these. What they do is, like, while they're expecting for a sweep of these, they keep waiting, and once they realize the price is not coming back there, they start chasing, and that provides more momentum to the trend. That's how BTC, Ethereum, and these markets form bottom. And if you see on altcoins, this is literally how like altcoin bottoms are formed, all for the purpose of getting more structural chases into the market, and that just leads to more momentum and price going much higher. That's how like execution is run up around the block here. And yeah, I was gonna talk about the trade reviews here, but I'm just gonna go over some more questions. Season asked, so you wouldn't long from value area high on lower time frame, rather wait for price to come back to POC? I would not. I would actually not long from, let's just say we have, what was I explaining here? Okay, let's just say we have an escape of value right here. Prices escape this value, it's not there anymore. It pumped up, it started to chop, it came back down. But if it comes to the value area high, I would not expect any sort of like mechanical bounce. Surely if it like current price action, if you see, we're like, if you see on the higher time frame, we're bouncing off of the value area high. For that sort of reaction, what I do is like I tend to wait until a clear bottom is formed, and I have some confirmation that okay, we are gonna run it up higher. That's what I look for if I'm trying to trade a value area high. But POCs have like a very mechanical bounce. It's a much easier level to trade. Yeah, going back to the trade reviews, this is an interesting topic for, this should be an interesting topic for most people. And just gonna explain what's going on here with my guy here, and what's affecting his trades. There's like two things that are affecting my guy's trades here, and that's like the understanding of like, let me just get a clear chart here and try to explain it here. That's like the understanding of like two structures, and one is like supposed to be like internal, and one is supposed to be like external structure. That's one of his problems, and the second of his problems is like TPing. After you've done the entry to the trade, you have to understand how to like be able to manage the trade itself as well. And just gonna go over some context he shared. Hey Shini, I've been trading and getting back into the flow of things, and I've realized sometimes I really have a good read on PA, and levels are clearer. And some days like today, I find myself flip-flopping between not wanting to short an uptrend and recognizing the break structure and taking it short. Like if you have been into trading for some time, this is gonna happen to you. Like even if you have a profitable strategy, sometimes bias just fucks you up, and like most of the time, why bias really ruins your trades is because you want to be right, and when you want to be right, you don't really look at the context of things itself, and sort of like this sort of structure and thing is what happens to you. And I don't know how to like mark out with a pencil here. Give me a second to figure out how to like mark stuff out. Maybe I can copy this image here, paste it here. Oh yeah, I can just do that. Right, now what's going on with this trade? I'm gonna read some more context from my guy and then explain it. It was also weekend, something to consider as well. Weekend is usually more choppier, and but there's been a few similar instances where this has occurred. Like I told you, if you've been into trading for some time, this is likely gonna occur to you. And if you're in your learning phase, or if you're into trading for some time, this is gonna occur to you at some point. And this is, if you understand what's going on here with you mentally here, you're gonna have like be a much better trader if you can overcome something like this. That is like you get like pretty good reads on PE most of the time. Like you're like boom, I get all the trades, I understand everything here, I'm gonna go win here, here, and here. And sometimes you just don't get the trend, and what that sort of like bias is mostly affected by trend itself, and you know price moves either it goes up or it goes down, and that trend can like really affect your bias even though you have a pretty good strategy in the first place. And just to understand that sort of trend is why I like mark out two sort of trends. We have first of all have like two sort of trends. First is like an internal, and the second is like an external. Let me see if I can like draw it around here. Right. So first of all, what we have here on this specific PA is like two trades that didn't go as planned. And let's just read some more of the context on what really happened here. As shared from my guy here, the bottom red line from where I shorted is the break structure level. The bottom red line is the break structure level right here for him. And I shorted my break structure level. The first long I took was because lows were holding and had a bit of an execution error leading to a shit entry. And this is very common. So what happened here was like my guy realized that there were a bunch of lows holding here and the trend could go much higher and then just like boom blast all the way up. But that didn't really happen. So just chasing that sort of blast of like an upshift, an uptrend that could have happened, he like just aped into an entry, didn't get the best entry, had a pretty shit exit because of FOMO and execution. And what happened afterwards was price started to hold highs as well, which he didn't really realize because he thought this to be an uptrend. And what eventually happened was that it ran his stop loss. Next one. And someday, what's and the mismanagement of the trade, not taking partials. He didn't take any sort of partials or didn't move stop loss to entry, so that just led to a very shitty trade here. And after getting stopped and seeing the break structure that I followed, I flipped short. This is very common as well. I like these are some problems that like you will face when you have found yourself a strategy, but you have to implement the strategy in a way that's recurring long term and could like you have to just cut off errors from that sort of strategy is where you will be able to get to the next level. And what he did here was like he saw that there were a bunch of like highs holding right here, and what he did afterwards was like he saw this to be a break structure, this sort of like low holding here. He considered this to be a break structure on the lower time frame and then just flip short. And what happened there was like second line cleared up my confusion. I think I recognized weakness, but I'm still shorting into an uptrend POI. And yeah, it was like an uptrend POI because this here is a low, is an external low. This here is an external low. This here could be an external low, and he's shorting into an external low. So this sort of like bias flip flopping happens again quite a lot once you're like just getting into the understanding of like microstructure. If you're new to it, this is gonna happen to you a lot. So I need you to understand that there's like two sort of structures, and I'm gonna explain it to you right now. The first is an external structure, and external for E, and the second is like an internal structure for an I. And what really is an external structure here? An external structure is the overall structure that that the price is following, and the overall structure that the price is trending into. So let's just think of like this price to be, we have to like label out the two different structures right here. And just for some context, what happened before this price here was that price we were like price was like nuking from a much higher pivot, right? So you have to understand that the price was overall in a downtrend, so that could be an element of like an external structure. So knowing that price is like in a downtrend, it's shifting downwards, it's breaking lows, it's holding more highs, more and more highs, it's holding highs, it keeps breaking lows. I consider this to be externally a downtrend until the point where internally it broke a low, it broke a high and started to shift the trend. And this could be considered like an external high break, but it's not really an external shift of trend, and I'll explain it in a minute. And this here is an internal structural shift. Like we have a bunch of highs breaking, we have a bunch of lows holding right here, and that just led to a more trend up. We have a bunch of TVAP grindy structure right here, which broke some highs right here as well. This high isn't really a break or external proper break of the external trend, because we are still holding highs right here, and we reject off of this certain POI. This could be considered an inducement, and an inducement is simply a sort of POI that exists when price SFPs into a P level, which exists into a POI. So you have an SFP that's done here, and this SFP exits into a POI level. So we have a high holding. So this is still not an external break of downward structure right here. And we continue to reject off of here, we reject, and then we start to shift the trend just a bit. And what we do really is like price starts to like give another break of a proper high right here. And it retraces back into a pivotal level where it starts to hold lows, and all of this is still internal structure, right? And internal structure is now shifting towards uptrend, knowing that the higher time frame or the external structure, if let me see if I can draw it through parallel channels. There is an option to yeah, I think I should be able to draw not this one, the parallel lines right here. Okay, so the external structure is still somewhat moving like this, because we know that there's like high holds and a nuke that happened from here. So even if price goes all the way up to like this point, it's gonna be still in a structural formation like this, right? But internally we aren't moving like this. Internally we are moving a bit higher. What is this, bro? Let me delete this. So internally we are moving somewhat like this. So if you see on the level here, let me draw it here. So internally we are moving a bit higher in this sort of channel. Now that we know that internal structure itself has shifted, but the external structure itself is like still pretty much downtrending, we could get some internal trades out of this structure right here, only to the point that you understand that it could reject off of any level at any given moment. So we could hold highs here. If we start to reject, we could reject off of this high, we could reject off of this high, we could SFP this high and still reject. So you have to keep an understanding of the external trend with the trade that you have opened for the internal trend. So now we know that the trend is pretty much like grinding internally. It's still grinding here and here and here. It keeps breaking highs. It comes to a point where it SFPs these highs, but it's still into, like, I would consider these to be highs as well, because externally we are still trending down. We haven't really broken through that channel of like downtrend from here. This could also be considered a sort of a range. That range is like coming from a downward structure, and that range is like chopping like this. That range somewhat like got back up to the level, but it didn't really break the range highs. It held into the highs. And how you can observe this holding of highs and not fuck up your trade really is make two decisions for yourself. And the first is like, you just don't choose longs into premium of a range, and you can draw like a pivotal high of the range, a pivotal low, and 0.5 of the range through a Fibonacci. And whatever the 0.5 and above is, it's considered to be a premium of the range, and you just don't want to be flipping longs into that premium of the range, knowing that there is an external downtrend and price could somewhat hold highs at any given moment. And you would rather want to be choosing longs into discount, because what you have in discount is a leeway, and the leeway exists something like this. So in a discount of a range, you have the leeway of trapped traders, and what those trapped traders do is like, oh, let's just assume that there's a lot of people that shorted here, a lot of people that shorted here. Obviously now that price is like above their entry and still in discount, that means they're in a loss. So what buyers would do is like they would pump the price up to keep those guys underwater and to liquidate them by pumping it more, so you have a better chance of getting an entry for longs into the discount of the range instead of the premium, because in the premium there could be buyers stuck here, and what shorts do, people who are short here, they're gonna sell more here, so you have much more risk getting into a long into the premium of the range than in the discount. So that's the first mistake my guy did here. And the second is like he did not take a consideration of external trend and got onto a long based off of an internal trend. And even if he did get into a long, he should have like taken into consideration the high hold that happened right after his entry right here. And what I usually do is like I try to mostly what I do is like I try to de-risk my trade. And what I mean by de-risking is by the way, there's quite a lot going on in my chart. Let me just delete some of this here. Delete chart, paste it right here. And yeah, what I mainly do for like de-risking of my trade, let's just say I have taken the trade here and I realize, oh fuck, I am not really in a good trade and the highs are holding, the trade is going against my setup. What I'm gonna do is like I'm gonna de-risk, and what de-risking means is that you somewhat like just take off of your risk. It could be like 50% of your risk, it could be like 60% of your risk. If it was externally, if this trend was like let's just mark it out, external trend and internal trend. If the trend itself was like externally in an uptrend, I usually, what I do is like when I'm not sure if it's gonna reject or if it has a chance of like running up from here as well, what I'm gonna do is like I'm gonna consider an external trend, and if I know, okay, the market is in my favor, what I'm gonna do is I'm gonna de-risk like 30%, I'm gonna de-risk like 30-40%, because what usually happens is that prices chops around your entry, it keeps holding the lows here, and then it just like runs all the way up, so you still have 70% of the position and you could still potentially get a winning trade. But if the trend is against your setup, like here, we were pretty much downtrending. This here was a downtrend, by the way. And what you did was like you longed into a downtrend, especially into highs. What you do is like you de-risk 70-80% right away, because you are fading the market itself. You have a higher chance of ruining the trade than you do in a setup where the market itself supports you. So I just simply de-risk the trade, and I just take whatever loss is on the remaining 30 or 20% trade that I have. And most of the time I just explain to people when I'm in the Discord sharing trades, I'm like, dude, this isn't really going well, I'm gonna de-risk the trade. De-risk sometimes for me means like completely risking out of the trade, just closing the trade for as minor loss as I can, usually above break even. I don't like trades that go below and then hold it all the way down to my stops. I usually de-risk right around break even, either above or just right around the break even level. That's how I like to de-risk, because my idea has already invalidated. I have no purpose into holding it all the way down to my stop loss. That's how I mostly manage my trade. And going back to this chart here, let me delete this here again. And go back to like what he did wrong. And this sort of flip-flopping is, again, it's gonna happen to you at some point. So what you do is like you take a loss because you didn't take into consideration the external trend. You have taken a loss, and now that you understand the internal structure is pretty much still grinding up, it's like pretty much the internal structure is still grinding up, and this is a POI for a level, and it could still hold a low judging by like and looking at these lows, it could still hold a low. You just ape into a short right here. This sort of flip-flopping mainly happens because you were wrong on the idea and you have this sudden urge to just make it all back, and you just like ape into trades, and that just ruins your entire strategy, fucks you up, and you're suddenly in a losing streak, right? So my guy takes the short here, and then what happens is like if price starts to hold a low, and then it starts like boom, it starts to run up. It then eventually breaks high. That internal sort of structure right here starts to prove itself into externally, and it starts to work. But by the time you understand that your trade here was already wrong, you're like you miss out the long move as well. So you want to take into consideration the internal importance of a structure and the external importance of a structure as well. And going back to some more details my guy shared here, which I did like explain to him here without knowing what happened to price earlier, which is the same thing that I'm explaining here. Externally, it's like this is what price looked like. It was going down. We started to hold highs here. Internally, it's like the structure is holding those here. So if you consider this to be a break structure, it's not really a break structure. This is a higher time frame, an external high hold, but internal we still have a pivotal low hold. This would be considered a break structure for me. And I could get into much more details, but I want to go over some more details my guy shared here. And then he realized, well, yeah, that's that. And that's really exactly what happened later on. We had like a low hold right into that POI. And this was all just micro chop for like the guy to be able to like observe it later on. And if you look at it here, externally we are pretty much chopping down. Internal shift starts to like happen around here, and this was the trade that you should have taken instead of like flip-flopping around here. And that really is how it went out. And there's like a few more things that I wanted to discuss for him. And that was like TPing. The second problem that I see for bro here is management of the trade itself. From here it looks pretty good. He's getting into trades, but the way he TPs, this isn't really like good results. Let me just like show it to you. This is like 0.5 hour trade. How did this happen to be a 0.5 hour trade? How this like happened to be a 1 hour trade? Let me just like explain it to you guys here. Delete this right here. Does anybody have any questions in the chat? Let me just give me a second. I'll just get back to those. Okay. What are the questions in the chat? Download an epic pen to write on the screen. I will download this after the stream. Bam Bam asked, where are all the recordings? I'm gonna upload all the recordings on my YouTube. They are uploaded, but I forgot to share them. Majim said, Shini, most traders struggle with bias. Bias is an afterthought of not a proper strategy. Like if you don't have a proper strategy, or if you don't have a proper system, the afterthought is going to be like trying to adjust the bias of either yourself or somebody else's bias, and then that's going to lead to a lot of losses later on. Kinda bored said, so in this case, if he waited for the highs to break, and then if he grind above that, then that is good long. Yeah, that's a good question. Like if oh shit, I have to go back to this chart right here. So if the bro had only waited for the highs to break, because we know the structure looked like this was a imbalance move here, and we had a high break right here. Usually what that indicates is a breakout, and as long as the breakout is done with proper volume and fade of the counterparty, then you can ape onto highs. And if in a volatile environment, it's gonna be a pretty awesome trade. What it looks like is, let me just show you. What it looks like is like let's just assume that there's like a high, and it's pretty much chopping, like just assume price is pretty much chopping, but it comes to a point where it starts to break off of that high of a range. And in this scenario, this is what this PA looked like. This is what the PA looked like. So if it's price started to like break out of that high right here and started to give sort of like internal momentum of the structure, that would have meant that we are shifting into an external structure from internal to external on the lower time frame. And the breakout, if given with proper volume in a volatile environment, so volume and volatility, especially I look for these volatile breakouts in New York session, or some sort of session that's close to getting some decent flow of money in. And if that sort of stuff happens and you see that sort of slow grind and structure like this happen, then you just like ape onto the trade. And knowing that price has become imbalanced after surviving in a balanced range right here, it's likely that it rotates all the way up to some previous range. That's how you can execute on these ideas. Going back to this setup here, this is like a 1 hour trade. Even though this looks like a 3 hour trade, the TP is supposed to be here. This here is a 0.5 hour trade. Even though this is supposed to be like a pretty much like looks like a 4 hour trade to me. And this is a 1 hour trade, even though this looks like a 1.2 hour trade actually. And I'm not sure what happened here. Maybe lost 2 hour. And this is supposed to be like a 0.2 hour profitable trade for him. These are the complete hours that he made off of the trade. I think he lost like 2 hour here, 0.5 hour here, 1 hour here. And what leads to this is you TPing too early on the trade. And most of the time this happens because you're too afraid to bet, too afraid. And actually this happens because of two things. And those two things are, you're either too afraid to bet the money that you have on the setups, and that's because you either don't have like proper funds backing you up in case you lose that trade. So that's why I don't recommend people that have like a portfolio below 10k to like trade on their own funds. Just go for like funded accounts. And the second reasoning is that you're just not aware of a proper strategy, and you're just TPing too early into a trade because you're afraid of there's one reason that this really happens to a lot of people, and it's again related a bit to a trend. And what happens with people is that when price is like trending up, they are somewhat like fading the trend. They keep shorting the trend all the way up. And what that leads to is like trauma in your trading. That leads to like proper PTSD in your trade setups. And once the price starts to actually, after you taking so many losses into that pair, you've taken like too many shorts into that pair. Once that pair actually starts to like trend down, what you do is by this time you realize, oh, I was wrong on all of my trades. This price is probably going to go much higher. What you start to do, you start to counterfeit the trend again and again. You start to keep longing a downtrend now, and this leads to more and more trauma and PTSD build up, where you, instead of like trading with the trend, you keep fading the trend. And when you actually are trading with the trend, you think, okay, this trend cannot go much higher. What I'm going to do is I'm going to take a long here, and the trend is actually going to go much higher. But what you're doing is you're too afraid of taking that many L's. You're afraid that the trend may have like stopped out too early. It could stop out right here and could just nuke you right here. So what you do is like you start TPing too early. You start de-risking too early, and you see the trend keeps going higher, and you don't bet more on the trend, and this just becomes a very repetitive process in your strategy. And this sort of like trauma and PTSD from this like fading the trend. And then when the trend is actually with you, you don't risk trading the trend. And this is a very repetitive thing that I look in traders who like make continuous mistakes, is that they want, it's sort of a trauma PTSD that you have to get over once you have made yourself like a proper system, a proper strategy. And what you can do is like you can practice trading more structural grinds like this instead of just like fading into a trend. And there's some more depth into it, but this is what mainly happens when you start TPing too early. This is the problem. This is the sort of trauma and PTSD, or some sort of like fun lacking, is what leads for you to like close the trades too early, because you're just afraid of risking the capital. And that's just like because you're afraid of like, if you're gonna lose this money, you can either not afford to get another trade like that, or you have like risked too much money and seen too many losses that you're too afraid to take another loss. And that just like leads to like you tipping. Like this guy here, he probably took a trade here, and on the first rejection here, he's like, okay, this is probably gonna reverse right all the way down, and he like maybe took out like 50%, and that just ruins the entire profitability of a 4-hour trade right here. So those are some things you want to look out for, mostly management of a trade, and external and internal structures of a trade. This is what I'm gonna suggest to my guy right here. And going to the second guy, this is what like here, he gets into a trade, and instead of like keep adding into a trade, he keeps partialing all the way up. This is, again, this happens because of that sort of trauma that you build up by just taking like random bullshit trades. And yeah, there's another guy that would want to review, Vish, and there are some things that he gets wrong as well, but I have not seen his trades before, so it's gonna be new to me as well. But we are just gonna do a trade review for him as well. And what do I see here? The trade idea was good, and the stop placement was bad. What's actually going on here is that he's trying to get a trade here. First of all, let's just see what time frame it is. This is a 1 minute time frame, and he's trying to get into a long here, knowing that there's some low holding here. There's an uptrend, continuous uptrend right here, but he gets into a trade right here, but he gets his stops run just before the trade was able to go back to his TP. This was his POI. This is a pretty solid POI. I would mark this as well. But eventually the POI gets tapped, gets a pretty good reaction. But it's his stop placement and like entry placement that really ruined his trade. What you could have done here was like you could have gone for a much bigger stop. You should have gone for something like this low right here, because if price what I want to explain to you is like let me just like explain this structure right here. Color this black, and judging from that Ethereum chart that I just saw, this is the sort of structure that was like forming for my guy here. These are what I consider to be external lows, external highs, external lows and external highs. Internal structure, maybe internal structure like started to like downtrend right here, but externally the low still somewhat held. This is also an external low, and this external low is supposed to be your entry if you're trying to long. And let's just say if you're trying to long here, this external low is supposed to be your entry, and your stop is supposed to be the prior external low. This is supposed to be your stop, and your TP should be the next possible high, or whatever the sort of POI that's existing here that could provide a rejection. And your stop should not be, because his entry was here, which was another low that was coming into that external low that had just formed. Like here, this is an external low, and this price is still here. This is an external low. And what I'm trying to explain is that this is what the chart looks like, and his stops is like around here. And you don't want to keep your stops on the current external low, because that external low has not given you a proper break structure, has not led to a lead, another movement in high, has not led to another higher high. So you would keep your invalidation on the prior external low, because that's where the trend is forming. Because again, it's a like in PA, this sort of like structure could happen anytime, but not while you're in a structural externally low holding like uptrend. So what he essentially did here was like he took the trade, he took the low holding trade, and he placed his stops too tight on an external low that is still forming, and could provide you more entries to the long setup. So you have to always go with the prior external low that led to a movement that broke the prior higher high. So you want to like somewhat like position yourself in a way that you always have your stop loss at a pivotal higher low. This was not a pivotal higher low because this was still in the making. So this PA was still in the making, and that's what exactly happened. It like took a stop and then just like pumped off of here. That's mainly what I see wrong here. And the next trade here, wow, some management issues. Like if you could just like manage the trade, what's happening here, what I see here is like, this is like the 1 minute chart. And I also feel like you're too zoomed in. Wish you were too zoomed in, bro. If you could just zoom out a bit, you could see a bit more clearance on the external structure, and that way you can mark the POIs out. I always have like 2 charts for myself. This is my first chart. I have an understanding of where the potential highs could be formed, potential local lows could be formed, and then I have a lower time frame chart. That's how I'm mostly looking at price levels whenever I'm looking at them. And yeah, I feel like this is too zoomed in structure for me. And even if this was considered to be like a high hold here, there's another high hold here. And let's just assume this is another high hold. He took short based off of the rejection right here, which is a good short. We got to a point of like rejection and a low here. We got to another point of like a high here, which another again held high right here. And that high led to a low break, which is pretty good. But what it did was like it started to like gain momentum again. And what I'm missing out here is like higher time frame context, because this is like pretty much like holding lows, and this line here could be a higher time frame POI. So you see here, there's a low here, there's a low here, there's pretty much like grindish structure all the way here. So you shouldn't like let me just like mark this out actually for a better understanding. So for me, this here is like, let's assume, I don't know what's like going on the left side of this PA for this chart. Let's just assume this was the external structure, and external structure was like going down. But at some point, what happened was like the internal structure shifted, and you see more momentum. This here is internal structure, by the way. Internal structure keeps breaking highs. There's not really a decent low into that decent break structure into that internal structure, so it's highly likely that internal structure could shift the trend. And considering this line right here, this black line here, could be a bullish POI, is what went wrong. You should most of the time, whenever I'm trying to take a trade and I'm trying to do like a top to down analysis, and this is how I like to take most of my trades, is I look for external trend. I look for an external POI. Let's just say this is a short POI for me, and price comes into that level. What I do afterwards is I hop straight onto like internal structure, and I look for whatever is going on the lower time frame there, and whatever that sort of development is happening, I just take a trade base off of that. And for this sort of development, this is pretty much like grinding up, and this is like internal structure right here as well. And even if let's just say, even if you like didn't recognize this, you got onto a short setup right here. You saw that this was supposed to be like a break structure right here, and you were like, oh, my short is going pretty good. But it went against your trade. It started to reject off. This is the sort of structure where you just like exit your trade right away, because this is internal structure, and what this internal structure is indicating is like it's starting to grind up all the way into a POI. This like 45-degree worth of angle is just like an indication that there are barely any sellers. Sellers are pretty much exhausted, and buyers are taking momentum, and at any given point they're just gonna pop off because there's barely any sellers. And the moment there's some big seller that's not holding the price down, it's gonna like buyers are gonna take control, and they're gonna pop the price all the way up. And that's exactly what happened here. If you were not able to get out of this trade break even, you should have been able to get out of this trade for a very minor loss instead of just getting blown out with slippage and a full stop here. For the next trade here, you are pretty much doing the same mistake, brother. You are let me clear some of this chart here for I don't know, okay, not do this. Okay. So what you're doing here is like price really hasn't really broken down that grindish hold of lows, that internal structure. Now that this internal structure has shifted to externally, because we're now like boom, it's like maybe if this was like going like this on the left side of this like chart here, maybe if we were in a higher time frame downward structure, I would take some caution. But to me it looks like a pretty nice uptrend. This is still pretty much like holding lows, and I would for sure not get into like shorting this level here, because to me this just keeps holding lows. There's quite a lot of buy opportunities here, and I think you took a short here because you thought these highs to have like changed the entire structure. But for me, the break structure would have like been this level or this level. But this here is just like the reason I am against this trade of yours is because this trade of yours is exactly right into momentum. And if you see this sort of like low hold structure, what it looks like on the lower time frame, it looks something like this. So there's the sellers are pretty much exhausted, buyers are taking the momentum, and you're shorting right into where the buyers are taking the momentum just because you think that there was some high that held here. And that's the importance of like microstructure. You have to understand that the current price is always going to be more valued than any sort of levels that are sitting behind it. And that is because of fresh volume kicking in. You never want to trade like fresh volume. Rather you will and what most people would do is like they rather fade like fresh volume. And fresh volume would be like when he took the trade, price was pretty much like grinding up. That's fresh volume. That's like fresh amount of buyers. There's like lack of momentum right here. And what people would do is they would like trust their POIs more and trust like orders that have been executed, because all of this PA on the left here is like orders that have been already executed. Maybe some guy was like long 100 million, maybe exited his trade right here. All of this is like executed like volume that has been like some trades open here, some trades close here. It could like be a lot of distraction for most people. You always want to rely on what the current market price is doing. That's where the goal is. Let me go back to the Twitch chat. And Majim asks, Shini, do you take news into consideration when you are trading crypto? I used to take news into consideration back in 2022. Now, not anymore, because like news just doesn't have that sort of like effect and volatility given to price these days. So I just don't really care about that. But I am aware that there is gonna be like a news event in like 5 minutes, 10 minutes, and what I usually do, just in case of a spike, I just like manage my position, maybe put stops break even, or maybe close the trade. That's what I do with news. That's it. And I don't like position right into the news. I usually wait for like that sort of spike to happen, and then wait to enter like half an hour or an hour later, because that's when PA has settled and there's some direction to trend. Quarter Black asks, are you gonna do like footprint stream today? Not today. I was supposed to do the footprint stream, but I'm doing a trade review stream. I'm just reviewing some trades for now. And T-Vapping asks, can you repeat the external and internal? I have repeated the external and internal this entire session. I'm gonna provide you guys with the recording. You can watch it later for like a better understanding. Majin asks, would you suggest he get off 1 minute and use minute 5 or higher? That's what you use for like top to down. So if he's like watching the 1 minute here, you want to have your POI set from like a minute 15 chart, then move to the minute 5 chart, and then get to the minute 1 chart, and then start to like understand the current market price, because the current market price is always going to be the most valued, because that's where actual volume is being executed, and actual volume is what you want to respect, because that is going to move the market. Next question. The black line is long PI, yeah. Can you please tell us, player 990, can you please tell us what is sessions time? I mean GMT. Because sessions time, session timing. Um, Let me just like write it down actually. Session timing. What time is it for me right now? Let me check the clock. For me, it's like 3:38 p.m. For me, it's like 3:38 p.m. UTC +4. Then for me, if I'm gonna explain for my session, like I have explained them in a lot of my channels, but for me, it's like the session starts from like 5 to 6 a.m. That's like the Asia session, and it continues to like 11 to like 12 p.m. Sorry, 11 a.m. to like 12 p.m. And then from there starts the London session, and that continues on to like 5 to 6 p.m. That's then that starts the New York session, and from there, from like 12 in the night till like 6 in the morning, 5 to 6 in the morning. That for me is like 12 to let's say 5 to 6 a.m. in the morning. That's like the pre-close session. These are the session timings for me, and you can just like manage them according to your UTC convert the timings, or you can just Google them up. That's easier. The Wisher asks, Shini, I kind of repeat same mistakes as Wish, and we just suggest that can take trades on the M5 for better trades. Listen, I think the point you're missing out is in understanding external structure. So I'm thinking that you guys don't mark out like proper higher time frame levels, higher time frame POIs like I have right here. And there's a lot going on here. Let me just delete some of this. So if you have like proper higher time frame levels like I do here, you're gonna be in like good levels for yourself. But if you don't have that, then you like, because minute one chart is pretty like a premium chart that you can use for understanding like microstructure. It's a pretty good chart. But if you don't have like the proper levels marked out, you're gonna be confused, because most of the time what price is doing is like let's just say this is what's going on minute 15. Price like pretty much chopping, and price is around here. But when you go to the minute one chart, only this is visible to you, and this is pretty much in the middle, exactly in the middle, and this is not where you want to be taking trades. And if you're only looking at the minute one chart, then you're gonna obviously take a long trade here, it goes down, you take a loss. You take a short trade here, it goes up, you take a loss. And most of the time it's just like mismanagement of positions and like readjusting of positions in the middle. So you always want to take like trades into extreme POIs on the 1 minute. So just have like a proper top to down analysis step by step in your trading, and that would somewhat improve what you're looking at. Modi Pro Shini, are the Twitch streams gonna be uploaded? Yes, they are gonna be uploaded on my YouTube channel. I haven't seen your last streams. I uploaded them on my channel, but I forgot to make them public. I'm gonna do them after the stream, don't worry. And Core Blank, when trading, should I be conscious of the trading sessions like London? Yeah, you should actually be conscious of the trading sessions. I think I explained that in my last few streams, that in London session, just go trade gold. In New York session, come trade Bitcoin. In Asia session, you can trade either Bitcoin, Euro USD, or either of those. And in pre-close session, go trade shitcoins. That's how like you can manage sessions for yourself as well. Biscuit, what's up? I'm just gonna go one more trade for my guy Wish here. This is a good example. Yeah, let me. This is a good example of like what current market price and management can do. That is, just looking at the PA here. What do I see here? I see like mid. I see like a middle. I think this is a POC. This is a POC level. So assuming this is supposed to be a POC of a range, I'm assuming that this is the middle. So you're trying to take a trade into the middle, which isn't really helpful, brother. So you're taking a trade pretty much into the middle, or maybe let's just say into this FEG POI right here, this high for you was maybe a POI, which is not what I look for, nor do I recommend. I always told you that you want to look for like extreme POIs most of the time, extreme levels that you want to mark out, and anything in the middle, just avoid, because that's most of the time it's just readjustment of positions for either market makers, or it's me or somebody else. And yeah, and let's just say you saw a reaction from price here, and you were like, okay, this got a reaction, and you saw another low hold here, you were like, okay, this is starting to like form something like this, and it's gonna go boom higher. But we got another high hold here, and knowing that we are in a downtrend, brother, you should, what you should do is like, you should, if you look at this here, what this looks like, what this would look like on the lower time frame, it will look like something like this. If you look on the 15-second or the 5-second chart, this will look like a continuous streaks of like lower highs, lower lows, lower highs, lower lows. And what you should do when price is at like this is at your long entry, knowing that you are in a downtrend, you should just like exit the fuck out of your trade. That's what I do most of the time. De-risk right away. So that's what like led to your loss. This is a, I could say that this is a decent entry, but this could have been managed better if you understood like lower time frame microaggression, and just manage the trade better here. Maybe one more trade. Oh, um, yeah, I just started to grind against your entry. Maybe de-risk instead of letting it go all the way to your stop. Oh, if you did close break even, that's pretty good. And for this one here, nice. What's going on here? This is a good example of an external and internal trend. Let me just mark it out. Right. Overall downtrend, so try to short NSFB. Shouldn't have shorted because price bounced from a long POI. Should have closed break even or in profits when I saw price going against my trade. So you are self-aware. You're aware of your mistakes. So that's pretty good. That's a step towards progression. You see that price is pretty much grinding down, and we have a high hold here. I wouldn't say that this entry is shit. This is something that even I would like try to like enter. You take a short here, but seeing the sort of reaction that you get here, what you do is like, you know that okay, the internal structure is against my entry right here. It's against my external structure right here, and it's starting to get that sort of reaction right here. And again, if you zoom in onto the lower time frame, what you're gonna see is like prices grinding up something like this. And what you can do is you go to the lower time frame, and then you just like cut this straight break even. That's how you like manage it. Externally we are going down, internally we're going higher, and we get a higher react chance of reaction from the like internal like POIs and trend. Then you just like manage your trades like this. Just if you could understand what goes on price right around your entry on the lower time frame, I think you could do much better. Next question. Next. Oh, I am pretty unfortunate. But this was again like a bunch of low holding. This was a breakout of the value area high, and just never get into like shorts while price is like just giga chatting like that. Just try not to like fade momentum. That is a big like piece of advice I tried to give myself early as well. This one here is this one here, if the stop loss is here, um and trade was good but stop loss was too tight, it should have been on the slide. Yeah, I'm not sure. Yeah, this could have been better as well. Maybe there was a low somewhere around here. Like a lot of these trades feel forced to me. Is there explanation on this? Ilian asked. Let me just open this one. And what are we looking at here? Looking at here, let's just understand what's going on the hard time frame. We have a bunch of highs and lows holding, more lows breaking, lows highs highs holding. There's, I would consider this to be like a FVG fill right here. And I mean, this is this my guy took a short here of the break structure from the reaction of this short PY right here. I think this is pretty self-explanatory that what happened here is like externally we are going down. So externally we are pretty much like going down. We have proved that. But again, internally we got a pretty good reaction off of this level right here, and this could possibly be a POI of some sort if I saw price on the left. And what we did after that is like we started to grind up. If you zoom into this PA, what this PA looks like, it looks like something like this. So that's a bunch of like higher lows here. You see these higher lows right here, and we have like, and we have some momentum kick in from these highs here. And what price does is like, this is an FEG right here. Price immediately like gets a pretty strong reaction off of that like FEG level right into that low, holds another low. And if you did take the trade here, what you could essentially do is like you could put your stops break even. And the reason I talk why you can put your stops break even is if you look at the structure right here, this grinding structure right here. If I try to explain it right here. So basically what's happening here is like price like broke a low here. Price broke a low. So that's your entry, I think. Let me just mark a short tool here. Short here, stop loss here. TP was supposed to be much lower. Okay. So price your entry was supposed to be like this low here, and it starts to like grind off of that low right there. And the reason you gotta go break even around here is because this is like momentum kicking in into your trade. And whenever price starts to come back up, that means like price is like that momentum for sales has run out. And knowing that we have like a low setup right around somewhere here, that means that this has ended up to be a higher low as well. Because if price was really bearish, it should never have like gotten to a point of like breaking that high right here, and instead it should have rejected right off of there and should have formed a structural pivot, something like this. Instead it's came all the way back up and broke the momentum for sells that happened right after break of structure and right after a rejection from a higher time frame POI. That means there's a significant shift in momentum for sells, and that's what exactly what happened here. So price started to break down off of that like low right here, and that's pretty much like a strong grind for sells. But momentum wise, that didn't really work out in your favor, so I just like most of the time just exit break even right away. That's what is like my understanding of this structure right here. Any more questions in the chat? Let me just see the Twitch chat. Do you think Dodge looks good to go higher? Dodge. Let me see Dodge. Yeah, Dodge looks pretty good. Yeah, Dodge looks nice. Probably this PI right here is like easier to achieve. I just hope like BTC here does not really fuck up, because it's like at a very pivotal level. BTC here is, because it's just like done a trendy move and it's not like continuing the trend. What it's doing is like it's somewhat like giving us signs of exhaustion, which if like it starts to grind up could be another trade for you. So I'm just waiting on for a proper setup. What the two scenarios that could happen here is that since price is like doing some sort of exhaustion right here, if it starts to slow grind here, you just ape into longs right away. but the moment it starts to like break off of that exhaustion low that it made, you could get a pretty much like a decent retracement short all the way back to this POI right here. And if it does like a slow grind here, just ape into some maybe hype, maybe two more altcoins longs, and then just chill. Which SFP are we talking about in the Twitch chat? What was I discussing? T-vapping us. Do you have a specific stop loss like 0.5% more? I have like 1%. I don't have dynamic risk anymore. I used to have dynamic risk when I had a lot of money, and when I was risking a lot of money for my trading account. But these days I'm just following like a proper risk strat with like 1% fixed. And if I'm going for higher, I like it's usually a higher time frame trade, something like this. That's when I'm going for a high risk. Biscuit Capital said, haven't saw the other SFP you were talking about. Which SFP are we talking about, guys? Which SFP are we talking about here? Oh, are we talking about this SFP right here? My trades when you said you would take as well. Oh yeah, this one here. Okay, so let me clear this right here. Delete this here. First of all, I have to mark out. This is not even SFP. It's just your stop was pretty cooked. You see these highs. This high is pretty much like held. I have no idea why you put your stops randomly just below the high. This high didn't even break, bro. So that's. I mean, if you had like placed your stop at these highs, because like if one of these highs hold, then that means like the rest are gonna hold as well. Your stop loss is just like pretty random. Again, never place your stop knowing that again, this is an external rejection, an external POI, but never place your stops at an external PO like high or low that's still developing, right? This high is still developing. This is the external high. This external high is the move, is the high that led to a move down, that led to an external low. This is an external high that has not led to an external low yet. So you never place your stops on a developing level. You want to place it up at a pivotal higher low that's already developed, right? That's what you want to go for. It's the same mistake you made, I think, in some of your trade that I review above. I think it was this one right here. So you always this is still developing here. This is has already developed. This has already developed. So you always want to have your stops at a level that has developed, like from an external low. This external low is the reason that this external high was caused. So this has developed already. This is still developing. So this is SFP and then pump up again. So this is what you want to look for as well in your setups. I mean, if this guy's stop was like pretty much at this high, then he just could have gotten away with the trade very easily. The external short here was never invalidated. It just like the internal trend was pretty just reactionary off of here, but the trade was good as long as he just like didn't mess up his stops probably. Player 990 said, I took a short right now, stop loss 112k. Let me see what's going on the lower time frame. Let me delete a lot of this as well. I would not really recommend you to ape into a short. This does not really look like it's breaking down just yet. Maybe I could look at the lower time frame. Doesn't really look like to me it's breaking down just yet. Maybe from this POI. Or the moment it starts to like strike below these lows, it starts from structure like this, is when you want to probably take short. Yeah, that's what I explained when I started the stream. Next question, please. Make sure I can share. This might sound off, but they should send some of the remaining trades so you can understand. This might sound off, but they should send some of their winning trades so you can understand their thought process and approve it. Yeah, I'm pretty sure I told Vish to send his winning trades as well. Last 10 of his trades, and if the last 10 of his trades were all lost, then he needs quite a lot of things to work on, I guess. Okay, T-Webbing said, can you mark the external and internal PA today? The external and internal PA for today. I guess this would be the internal PA. The internal PA. Oh, externally is trending up. Trending up. The external PA is that it's trending up. Or based off the hard time frame, the externally is trending down actually. The internal PA is like up. But if you go to the lower time frame, yeah, it's like still trending up. I would consider the internal PA to be here to be like trending up, and the external to be this one here. That's like trending down from high to this low all the way here. Yeah, that was what I was like trying to review into this like session today. If anybody has any more questions, just ask me in the chat. And if you guys don't have any more questions, just let me know. This was like I was gonna do an overflow session, but like a lot of people had some sort of like trade mistakes in their trades. So I was like, okay, let me just review this first, and maybe tomorrow or the day after, I'm gonna do a proper overflow session. I guess if there's no more questions, I appreciate you guys for joining. I will make sure to upload all the Twitch streams on my YouTube and make sure to send them to you guys as well. And see you guys later. Also, by the way, I wanted to talk to you guys about something. There's like a community thing that I made. If you guys follow the Shinicord at Twitter on Twitter, you're gonna see that there's a community thing where you can post your charts. If you're not in the Discord or if you're not into the premium, like you can share your trades or you can share your setups into that community panel. I'll post about it later after this stream, but if you have any sort of trades that need to be reviewing like this, any sort of mistakes I can point out, just spam them there. I'm gonna watch them and then I'm gonna probably do a stream. uh Let me see if I can like show you guys that actually. um what do I show you? Go to Xpro. Give me a second. I'm gonna open the community tab and show you guys how to like share your trades into that community. Shinicord. Right. Okay, let me just like move this here. Let me know if you guys can see my Twitter right here. So basically, if you go to the Shinicord or my like Twitter, you're gonna see that there's a community tab right here. And what you're gonna do is like you're gonna click on this community, and you're gonna see the community like this. And then what you can do is like you can just like when you open the community panel, just make a post, and you don't have to like share it with your followers. The post is gonna stay right in only in this community, so you can like keep posting your trade setups and any sort of questions that you have, technical or anything, and I will make sure to answer all of them in the next stream and make sure I give like some decent explanations on those as well. Yeah. Oh yeah, there's another channel, guys, by the way, for the people who have like, you can see there I have quite a lot of DMs that I'm stuck with. So if I'm not watching your DMs, just spam the query channel. I'm more active on the channels anyways. I'll make sure to answer all of them. Yeah. If you have like any sort of like story or anything you want to discuss, that the community channel like on Twitter is right there publicly. Well, thank you guys for joining the stream, I guess. And I hope that you guys join the next stream as well. Yep. Medici, see you later. And yep, take care. See you guys later. Goodbye.